Hello, everybody. This is Toni Turner, and welcome to the Market Now as of Friday, January 10th at the market's close. Before we start, please know that all of us at ToniTurner.com and Tony's Market Club wish all of you a very happy, healthy, and prosperous new year. Well, we got the monthly jobs numbers today, and U.S. job growth slowed in December after surging in the prior month. But the pace of hiring is enough to keep the longest economic expansion in history on track, so that's good news. And now let's look at three charts that could give us some insight into the week to come. First of all, we're going to look at our daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our benchmark index, the S&P 500. Now, before we start, please know that the Dow Jones Industrial Average did run up over 29,000 today for a few minutes, so maybe we'll have to get out our Dow 29,000 hats to wear pretty soon. Anyway, today, when I captured this chart of the SPY, it was, the close, I should say, was at $325.59, or about $32.55 on the S&P 500 itself. Now, as you know, it has been making record new highs now for a real long time, certainly ever since November, December, a little hitch down here and back up again. Seems like almost every day is a record new high on the SPY. Again, it made a new intraday high today at $327.46, and again then closed at $325.59. It set a new all-time closing high Thursday, that was right there, at $326.65. So that's the new all-time closing high. Now, as we've been doing, we're looking down here at the 14-day RSI. We've been watching it for several weeks actually since almost the mid part of December, where the 14-day RSI has been trading over its 70 line. And when it's trading over or moving above its 70 line, that means it's overbought. And that can be a slight negative. It means that, as we used to say, that everybody's long the S&P. Well, of course, that may not be exactly true, but certainly it does mean that a lot is going on here. Now, kind of interesting here, we have what's called, it's a very slight one, we have what's called a bearish divergence here, and that the SPY, as you can see, is making new all-time highs, while the RSI is very slightly lowering. Actually, today now coming in below 70 at 66.68. So a very mild bearish divergence here, meaning the indicator is going lower while price is going higher. And what we usually say here is that the indicator usually wins. Now, this is not a sudden indicator in that it means that the SPY will fall on Monday morning early. It doesn't mean that, but it is something to kind of keep in your back pocket. Also, because I'm a trader and I worry, that's what I do, I'm keeping an eye on the MACD here. Now, as you can see, the MACD line has been moving, and the MACD, and you can't really see them. There's a black line and a red line, but because they're right on top of each other, you can't really see more than one line here. But look back here more toward October, and you can see the black line, which is the MACD line, and the red line, which is its signal line. So both lines are kind of glued together here, moving horizontally, while the SPY is moving higher. So that's another slight negative divergence here, whereas the MACD, like the RSI, is saying, hey, I'm not impressed that you're moving to newer highs. I'm not impressed at all. So it's just something to keep at your elbow, as I like to say, something to keep in your back pocket and say, okay, got it, I'm going to be careful. One other thing we want to look at, the SPY has been making new all-time highs, as you know, but look here how we're getting more volatility in many of these days. Volatility simply means wide price swings, And to me, a lot of these days say that the bulls and bears are starting to duke it out here. If you look back in October, even the first part of December, you'll see that the candles here are very narrow range, and the bulls are just ever so gently tugging price higher. Now, however, we're starting to get some arguments here as the SPY moves through the first week in January. Now, it is positive. It is positive that the first week in January, although we had a little dip, it's from here up was the first week. It has been positive, and that's good seasonally speaking. That means that that the year of 2020 will be a positive one in the stock market. That's usually what that indicates. Nothing is ever written in stone in the stock market, but if the first few days, or the first week, I should say, of January is positive, some people say the first month of January, but certainly the first week, if it's positive, that does say, seasonally speaking, that we should have a pretty good year. Just remember to keep your stops in. So the SPY here, again, making new highs. We have a red candle today, as I think it may be giving up a little bit of its speed here. So do be careful. Please do keep your stops in as we move into the coming week. Our next chart here is the chart of the QQQ, the daily chart. As you all know, it represents the NASDAQ 100, very important index in the market. And the top components include the top large cap tech stocks, and it does represent the top 100 non-financial stocks in the NASDAQ stock market. Now, when I captured this chart today, the QQQ had closed at $218.43. It ran up to an intraday high today of $219.87, then fell a little bit. Now we did have a new all-time closing high on Thursday right here at $218.99. So we've had a really steep run up here, a typical run up that's a little easier, maybe more sturdy, would be at a 45-degree angle if I could draw that. This angle is getting a little more steep. And again, you can see the volatile candles, volatility, arguments coming in here between the bulls and the bears. The bulls, of course, are saying, nope, there's still more to go. The bears are saying, no, we're getting too toppy here, too stretched out. A lot of FOMO going on here, fear of missing out. I can see it with these candles in the last week in the market. Moving higher, yes, but bulls and bears arguing yes. As far as the RSI goes here, it's overbought. It's at 74 on the QQQ, so that the RSI is overbought. The MACD line is moving up ever so slightly, so it's pretty much awake. But I still think that price is stretched really tight here. So we're going to have to see in the coming week if the QQQ can continue to soar into blue sky territory. Again, I am taking profits on some of my positions, and I am definitely raising my stops, and they are firm stops or hard stops with my broker, as we call them. I don't want to give back the profits we have so far. Our third chart today is a chart of the iShares US Real Estate ETF, a daily chart, of course. This is the IYR is the symbol. Now, the iShares US Real Estate ETF includes real estate and REITs, real estate investment trusts, has 114 holdings. The top components are American Tower, Crown Castle, Prologix, Equinix, and Simon Property Group. Of course, that's the big mall REIT. Now, I'm going to tell you that after I looked through so many sectors today, and almost all of them are very overbought, very overbought, soaring way, way, way up at very steep angles. I am now getting, as I said, defensive. Yes, I'm taking profits. Yes, I'm firming up my stops. And getting into a little bit of real estate here is actually a defensive move. This has a pretty nice pattern, this IYR. As you can see, it came up here in October. excuse me. Yeah, it came up to October, all-time high of 96 in October. Then it pulled back here as technology stocks took the center stage because, of course, they're much more glamorous than real estate stocks. And so the IYR pulled down here, fell below its 20-day and 50-day moving average, fell all the way down here in the middle of December, down to about 89.25. But it jumped back up quickly. It fell below its 200-day moving average, but it only stayed closed below it for 1 day, and then the IYR jumped back up quickly to move back again above its 20-day and back again above its 50-day moving average. Now, if we look here during this recent pullback, we might be able to make a case here. It's not done yet, but we might, if it does right, be able to make a case here for an inverse head and shoulders. Now, we won't be able to make that case legal until or if the IYR moves up and over, I'm going to call it $93.80. Won't have to pick on that, but and if the market remains in the coming week positive, but maybe a little dicey, again, I'm going to get more defensive. If the IYR remains positive, it does have, again, resistance coming in here at about 93.75 or so. But if it stays up here above the 50-day moving average, and it closed today at $92.92, if it does remain positive, I may add shares, a small amount right here, a small amount to my trading portfolio. I would scale in on this one, especially with the market the way it is now. So if it stays green, I'll add a small amount, small share size to my portfolio. If it moves up and over what we can call the neckline here, say up over 93.80, I may add shares to my position. My initial stop is going to be down here, a close below the 200-day moving average, which is coming in now at $90.49. So if I get in, I'll keep it there for a couple of days. Then if the IYR starts to rise, I will definitely turn this into a much tighter trailing stop. So if you like, and the market's a little dicey now, I don't mean falling hard, but I mean a little skitterish next week, you may want to keep an eye on the IYR. And now on to next week's economic reports. But first, please join us this coming Monday for our next session of Tony's Market Club. If you're not sure how you can make money in the market right now with it getting so toppy, please let us help. During our session, we'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. If you can't attend the live session, no problem. The recording is available to all of our members just a few minutes after the session ends. This is a low-priced, high-value opportunity to learn how to trade more successfully and how to make more money. So please join us. For more information, go to the link on this screen or simply click on the button below. And now for the upcoming week's economic reports. Not much going on Monday. Tuesday, we have the CPI, or Consumer Price Index. Wednesday, we have the Empire State Manufacturing Report, the PPI, which is the Producer Price Index, and oil inventories. Thursday, we'll have our usual jobless claims, the Philly Fed, and retail sales, and our usual nat gas inventories. On Friday, we'll have housing starts and building permits. That could move the IYR a little bit. We'll also have the University of Michigan Consumer Sentiment Report. Again, join us for Tony's Market Club this coming Monday. Don't miss out on this terrific opportunity to increase your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.